Welcome, everyone, to the HIGHTECH VENTURE DAYS panel on microelectronics. We're here today with three interesting people, plus me. I'm your host, Falco Schütt from Next Big Thing AG. And the three people I've got today for you are Guido Überreiter of Globalfoundries, Costas Meimetis of u-blox, and Sebastian of M Ventures. We're going to have an hour of hopefully very interesting discussions for everyone. And I would like to start with introductions. Maybe a bit of background about me first. I have been working in some deep tech IoT for the past 6 years. I've got about 10 years of marketing and biz dev as well as operations experience in the software industry. And I was asked now my role as a digital hub representative of the German government and the Next Big Thing AG as a company builder in that area of IoT and the machine economy to give you some insights and lead through the discussions today. First up, I would like to introduce Guido Überreiter of Globalfoundries.
Okay, thank you, Falco. So as you said, my name is Guido Überreiter. I'm working for Globalfoundries here in the Dresden area. As you all might know, Globalfoundries is basically a semiconductor manufacturing company. So we're producing wafers. At the end of the day, we're producing not only wafers, but in some cases, and for some of our customers, also chips, so packaged modules. My background for myself, I'm actually a chip design engineer. So I started in AMD as a microprocessor designer almost 20 years ago. And then through various, I would say, corners that I turned in my career, basically am now responsible here in Globalfoundries for the so-called pre- and post-fab operations. So getting designs into the factories and getting wafers into our partners to basically manufacture the input chips. But it's basically for Globalfoundries and for myself, a role where we are doing that globally, right? We're doing this in our factories in Singapore, here in Dresden, in Germany, but also in the US. And we're doing this through a technology portfolio that spans many, many, many different markets, right? From 5G, from data centers, and most importantly, also into the IoT range where we are providing wafers and we're providing wafers to our customers and their end customers.
Awesome. Thank you for that. Next up, we've got Costas. Costas, would you like to say something about yourself and u-blox?
Absolutely, yeah. So let's start with the company first. u-blox started more than 20 years ago as a spin-off out of the ETH University here in Switzerland, with an aspiration to miniaturize GNSS receivers. So that remains the crown jewel of the company until now. So u-blox is a fabless semiconductor company developing chips and modules, primarily for the industrial IoT and the automotive markets. Beyond GNSS, where we are having a leading position in the market, we have diversified our business and we are also developing communication modems. And also we're adding a layer of services on top of our silicon, which is the latest trend within the industry and something that our company has adopted as well. Myself, I do have an engineering background as well. I was a chip designer like Guido in the old days. Then I have moved to the entrepreneurial world. I was a startupper myself. I was the CEO of a silicon IP company, which after a long journey of 10 years with many ups and downs, it was acquired by u-blox. Now myself, being part of the corporate strategy team, and among the many things we're doing here in this team, I'm also heading our corporate venturing activities. So, interacting with startups and eventually investing in some of them that we find interesting.
Awesome. Thank you very much. Sebastian, I think it is your turn to talk about yourself and M Ventures.
Sure, thank you. I am working for M Ventures, which is the corporate venture capital arm of Merck. Merck is a quite diversified company ranging from healthcare, life sciences, and what we call performance materials. I'm specifically investing into performance materials related companies, and within Merck, we've defined this as display and semiconductor electronics materials. We do have a portfolio of 13 companies at the moment, assets under management, or of total investment ticket that we can deploy of 400 million euros. And all in all, our portfolio ranges, as I mentioned before, across healthcare, life sciences, and performance materials, in a total of 55 companies that we've invested in. Typically, it's Series B and Series A stage companies. And myself, my background, I'm a physicist, did my master's in Austin, Texas in the US, my PhD in the UK in Cambridge, then spent my time after my PhD as a biz dev manager in 2 early stage companies which spun out of the University of Cambridge, and then joined HIGHTECH Venture right after. And since 2017, close to 4 years, I've been now working for M Ventures.
Sweet. Good stuff. You guys are fast, just so you know. Is there anything anyone would like to add to your credentials, or should we just move on to the core, which today will be the current trends in microelectronics, some technological trends, and of course our main discussion points as to where we see startups headed?
I would say let's go.
Let's go. All right. So as announced, we have been thinking about the current trends in microelectronics. I personally only work more in the area of software-based startups and the creation of them, or very early stage, meaning you guys are probably at the heartbeat of what's going on in microelectronics. So where do you see microelectronics and the current trends headed? What are the trends, and how will they impact first the industry, and then maybe later on also the different companies in the industry from large to small? Who wants to start? Or Costas, maybe give us your picture first, because you were acquired.
I can do that as well. I can give my perspective, and I'm sure we'll have many perspectives here from the others as well. So there are unsurprisingly many trends in the industry today, ranging from developments in communication standards like 5G is really heating up. Then we have a trend which is around how we bring the intelligence down to the edge. Until now everything was happening somewhere centralized, but now there is a strong requirement that the devices that comprise the IoT world will require some form of intelligence. There are many innovations happening over there, so I see this as a clear trend in the industry. And then it's unsurprisingly is developments that have to do with any form of optimization at the end device. The most important being the power consumption. Many of those devices will be mobile, which means they're going to be battery operated, or others that are stationary. They will need to stay somewhere remote on the field for 10 years or so. Which means that the actual design of the hardware and the software, I think there are blurred lines actually between the actual hardware and the software. They need to be designed in a way that will be optimized, and they will be able to operate under harsh conditions in a very efficient way. So that is again a very clear trend, and that goes across the spectrum of many technologies about how you will design the silicon, innovations that happen in the fabs that would allow the design of that silicon in such a way, how you will write the software. So it's really across the board that all the innovation will need to work in tandem in order to deliver what the industry is expecting. So that is more like on the on the technology trends that we do observe today. In terms of applications, I think now we're in a stage where the first phase of the IoT playground and prototyping now is maturing, and many companies are moving from the prototyping stage to the actual deployments. Of course, we have the hiccup, the last few months with the pandemic and, the trade wars and everything, but I think that's not going to last forever, and, market will recover. But definitely there is a trend of, maturity in the IoT deployments, and that essentially accelerates all the trends in the industry in relation to the technologies that I mentioned before.
Sounds interesting. I have to say, knowing a little bit about IoT and technology in that respect, I'm wondering, actually, Guido, do you see the trends going in the same direction, or is there anything you would like to highlight that is going differently?
Well, I think it's actually that trend coupled with a couple other trends, right? I mean, for many, many years in the industry, we have been looking for like the next nanometer node, right? And we were really focused around like computers, and then it went into pads and phones. When you look at from our perspective, when you look at the trends today, you have this trend still, right? Everybody still wants like faster and you know, longer, but it's not just that, right? When you take IoT into considerations, it's not necessarily the next nanometer node that's driving a lot of the IoT applications. It's more the versatility and, as Costas said, like power efficiency. And the other trend that we're seeing a lot is like automotive, right? And by automotive, we don't just mean like self-driving cars and like the compute performance needed for that. It might be as trivial as how to steer the battery the most efficient way, right? How to keep the battery life as long. And it's amazing for us of looking at the IoT hockey stick, where a couple of years everybody said, well, it's 50 billion devices, and now we're talking about 80 billion devices in like the relatively near future. I think that's just one component of it, right? How much silicon you need to actually run a self-driving car 5 years from now, and not for the performance, just for the battery, is amazing, right? So that's the next hockey stick that's coming. And then for us, obviously, as Costa said, 5G is 5G, and what's coming then with 6G is putting a lot of more, I would say, emphasis on the technology readiness, but also I would say of the innovation of the overall stack, right? Because as I said, it's not just 5 nanometer or 7 nanometer. Some 130, 180 nanometer technology might just be fine enough if you have the right enablement on top, right? If you have the right IPs, the right software stack, the right idea. And that's why what we are seeing is a lot of technology or industry trends actually overlaying each other to a more, I would say, substantial growth than what it has been for the last 10, 15 years.
And if you don't mind me asking, is that growth more for the larger companies, or is that growth also available for smaller companies, in your opinion?
I would say there is in particular growth for smaller companies as well, right? IoT for me is still a market that's very fragmented, right? Many, many smaller players that's playing there. When you look at the innovation that you need, even in the automotive market, there are more and more smaller guys coming, right? Because they are fast, they are agile, they are sometimes not bound by all of the constraints that big companies have, right? But there are a lot of fresh ideas that we're coming, coming through like smaller companies, actually, specifically in those markets where I would say it's typically dominated by a handful of big guys. But right now, I think there's still a lot of flexibility down there.
Sebastian, that sounds like it must be, match made in heaven for you if you have to invest in a new company. Do you see the trends going the same way?
It's exactly the same. I mean, as a background for us, for you all, I mean, we initially, we started with investing in performance materials companies back in 2016. We initially focused on display-rated companies in 2016 and 17 and 18, but particularly over the last 2 years, we really looked into really, let's call them hardware-based companies that are harnessing, processing, and storing this data. This is all around. So for us, it's really, although we are a materials company, and the underlying message for us is really data is the new oil, and that's what we believe. We also call it like the data wheel, and this data wheel is spinning faster and faster. It's really how do you interface? What are the new forms of interactions with data? How do you generate these data, as we already discussed, and in the fastest and the most energy efficient way? How do you transfer it? Also similar kind of aspects to speed and obviously energy efficiency apply to this when it comes now to 5G. And obviously, how do you process this? New forms are coming up there. As we just said, it's not only GPUs that are CPUs which are out there, but obviously now when it comes to new forms of mimicking the brain, and you have FPGA, GPU, ASIC that is coming, but obviously for sure new forms of neuromorphic computing is coming along, which again mimics the brain in such a way that it becomes more energy efficient to process this data. And then obviously you have to find means and ways to store this, last but not least. So we see this kind of data wheel moving faster, and we at Ventures are trying to kind of make investments in these areas where we feel the biggest bottlenecks and challenges lie. I mean, this is something for sure I can resonate quite well. And in terms of mega trends, kind of the slice in these 5 aspects that I mentioned: the interface, generation, transfer, processing, and storage. But we see for sure, and let's call it in the interface space, that virtual reality, augmented reality is for sure something that is going to come. We predict a CAGR of 50% plus over the next 5 years. We see this with various customers that we are working with. IoT, we highlighted for sure. This is already expanding quite heavily, but we foresee also, if I can call autonomous car also IoT, this is for sure something where data will be generated in a speedy and fast way in huge amounts we've never seen before. And obviously artificial intelligence trend, which obviously relates to on-edge devices as well, and data sensors, which relates obviously then to big data and accelerators is for sure something which already highlighted can be done with the node sizes which are out there. You don't need to have the 5 nanometer, 3 nanometer nodes. So this is something where we see huge opportunities from a chip design perspective that is for sure interesting for us as Inventors too.
Guido, you want to say something?
I just wanted to add to that, right? I mean, for many decades we have talked about silicon, right, and 5 nanometer. What was just said around data centers and like edge devices, right? A lot of emphasis will also be, once the data is in this edge, how do you get it somewhere else, right? And what we're seeing is also some trends that basically go away from the traditional semiconductor CMOS stuff more into like silicon photonics, right? How do you actually get this big data cloud connected in a way that it's energy efficient and still fast, right? And that's where I think the trends are not just, continuing down this road, it's actually getting much broader. And the other thing that we're seeing is that a lot of our customers are asking us for like additional, elements of the technology, right? Not having a CMOS CPU kind of architecture, but adding non-volatile memory on it, adding RF, right? Getting the devices smaller and smaller, and size matters maybe, but also cost matters, right? And when you basically integrate more and more, you get more cost efficient and you get more energy efficient. And that's what we're seeing as well, right? A lot of consolidation or like additional technologies are getting glued onto the same silicon or a semiconductor wafer. And so to support all of that growth, right? Because otherwise it's not going to work. If you just take discrete components, you will change the battery every 3 months.
And I take it Globalfoundries is building these chips, right?
Well, building those chips, but also developing those technologies, right? And there's a lot of, I would say, still technological innovation needed to merge all of those together. On a PowerPoint, it's very easy to merge RF and CMOS and non-volatile memory all together. Well, you do this on the atomic level, it's a little bit more complicated, right? And there's a lot of, I would say, innovation and technology innovation still needed to really get this to work in the way that the customers and the industry and actually the ecosystem needs it.
And because I've been wondering if everyone talks about the nanometer scale and everything. So it seems we're somehow in agreement that it's not just about smaller, it's about more versatile, it's about more applicable. And I've definitely seen those slides where everything is already there. It's just not real yet. So if you take that into consideration, what might be something cutting edge yet realistic to do in the next couple of years, in your opinion?
I would say, like what we call in German, the eierlegende Wollmilchsau, so everything together, really, and providing it in a way, honestly, what I think, providing it in a way to design companies or to actually higher level companies that it's easy to use, right? Specifically, if you are a smaller company dealing with the technological challenges, you need a whole engineering team just to govern the hardware, right? And getting that a little bit easier, getting IP portfolios, getting an enablement structure together where it's very, very simple and seamless to basically create such a semiconductor device. That's, I think, where is a lot of like push that needs to come, because I mean the big guys all have this enablement teams internally, right? And they are using them across a multitude of products. And it's cost efficient for them. For smaller and startups and getting the IoT market really infused with all of those innovations, I think there's a lot of work that needs to be done, not just on the atomic level and stapling atoms on top of each other in the wafer, but providing the right enablement infrastructure and IP portfolio that it becomes a seamless and like fast semiconductor design process Specifically, if you also go into like small nodes, but not as small as 5 nanometer, right? So there's a lot of, I think, simplification needed to serve the market.
I mean, it sounds like the opportunity is there for a big company, but guys, like Costas, Sebastian, do you see it also for smaller ones? I mean, because the Globalfoundries has research teams in-house, right?
I mean, Costas, go ahead.
Yeah, so I think it depends on what kind of startups we're talking here. If we zoom into the heroes of that industry, the startups that are still focusing on developing their own chip, for example, the hardcore fabless semiconductor startups. I think just to be realistic here, they have an uphill journey. We need to acknowledge that is a really capital-intensive path. Developing your own chip. Typically, those startups will not end up being unicorns, which means that they will struggle a bit finding capital from traditional investors, which they are more steered towards software companies. However, I think the companies like Globalfoundries and others, they are providing those tools that eventually could accelerate this path towards materializing a product. So it's not a very VC-friendly business, I would say, but still there are opportunities. And daily we do see some companies that are doing some really amazing stuff that you would not expect. Those stuff.
Do you have examples?
Nothing that I would like to mention here, explicitly, but you see companies, for example, innovating. Again, I will use the same example in edge artificial intelligence. Companies that are developing neuromorphic accelerators, which is really state of the art, and that is even challenging for larger companies. But it's you see that history again, that smaller teams do manage to move fast and in some cases outcompete more established companies. I think that we will see that in circles, and that's a continuous trend. The fate of semiconductor startups, which is quite different from the software ones, is that they need to live in the future. So they need actually to predict what's going to be needed and what will be useful in 4 years from now. Essentially, they need a couple of years until they design, manufacture the chip, until that chip then, is being deployed to an actual device, collecting some data and, processing that, bringing intelligence. That's a 4-year journey. So if I develop now, if I start my own company, I need to predict, what will be needed in 4 years from now. That's the typical cycle. So you need really to be visionary and have significant market intelligence in order to hit the nail here with a semiconductor startup. That's another thing. So I'm sorry for being a bit, conservative here. I'm just trying to be realistic with what semiconductor startups, are facing.
And I agree with you, Costas, right? That you're seeing a lot of startups moving up in the chain, becoming more like software or system level startups, and looking at the hardware as a commodity, right? Not I don't want to deliver it. It just needs to be there somehow. Yeah. It just needs to be there is the problem, though, right? Still, somebody needs to be what needs to be there, and I think that's where the challenge comes from. But I fully agree with you, right? It's capital intensive in the beginning, and the outlook is very far down the road, right? While on different software or even the application base, right? The space is much shorter. It's
Yeah. But I think when you compare it with what happened or was out there 3 or 5 years ago in terms of semiconductor startups, and when you see the rapid increase in both investments that are happening, but for sure more in the AI chip design space, for example, I find this quite fascinating to see there is really this spike happening in the moment, both in terms of deal counts, investment that has been put in, but also in acquisitions or IPOs. I mean, just talking about or mentioning like the Capricorn or the Altera or the Mobileye or just recently Habana Labs, with all exited beyond $1 billion US. The reason why they did this is obviously because there's this huge market need there at the moment. You see these bottlenecks, but also I think from what already was mentioned, I think it's the acceleration that they can take, the de-risking of the supply chain that they can have based on, let's call it, technology nodes that are not leading edge. And I think with this, from a chip design, chip architecture point of view, I think you can speed up the developments quite significantly. And I think that makes, at the moment, when you look from a VC point of view and want to do investments in that space, it quite attractive. So we are for sure quite excited there. We see quite a lot of potential companies both in Europe that we want to invest, but obviously also in the US, and recently looking into China as well, where this is a hot growing kind of hotbed. And so we are thinking for sure at the moment, based on the ecosystem that is out there and the need for innovation, that this is an attractive opportunity at the moment to do investments from a VC point of view.
But this trend that you mentioned is also linked with the trend that we see from corporates joining the party as investors. So, as I said before, investing in a semiconductor startup might not be so attractive for a traditional VC firm, but it's not the same for a corporate VC arm. So that was something that has been developed over the last 5, 6, 7 years, where corporates were starting to making investments in startups, and I think that allowed many of those ideas to come to the surface actually.
And why do you think that is? That CVCs find it interesting so much.
Sorry, what was the?
I'm just wondering, before Sebastian now pitches in, why do you think that is, that CVCs find it so much more interesting than VCs?
I think that they might be more satisfied with modest returns in their investments. They might have also strategic benefits, which is not the case for a traditional VC firm. I think those are the two main reasons, and they identified a gap in the market. So VCs they were neglecting those innovations, and again, in conjunction to what I said before, I think it triggered the whole corporate venturing wave that we have seen the last few years.
Would you also say that they cannot potentially pull all the innovation off internally?
Absolutely. That is when I said strategic motivation, that has to do with they start recognizing that not innovation could happen within the walls of their company, and they start working with other innovators, startups, that they might move at a faster pace, and that is a strategic motivation that the corporates have in investing in those companies.
Now, if I want to be mean, Sebastian, I could say Costas just mentioned that CVCs have to act on behalf of their company because they're not innovative enough, and they don't really want to make as much money as VCs, apparently. What do you think?
Well, I can spin this around a bit. I agree halfway. For sure we see more funding going also from independent financial investors into these types of companies, but I fully agree. There's a reason why software-based companies are more attractive, because simply the scale-up is quicker, right? And you don't have these walls, these unpredictable walls that are hindering you theoretically from capturing a big market, right? If everything from a business model, etc., pans out. Here we have a huge value chain, as we experience, Guido and I, every day, and you have to connect each and every bit and pieces in order to make a hardware product work, right? And the reason why CVCs are intending to invest there more, for sure, they have a bigger oversight into what's going on in the system. They can rely on business intelligence internally to see how the market is moving over the next 3 to 5 years, so they can make their bets much easier. Plus, if you pan it out right and in CVC invest into your company from a CEO point of view of the startup, if you can utilize this corporate as well from a supply chain point of view at arm's length negotiations, I think you can capture and de-risk some part of your value chain needed. And that's why I think there's a win-win, hopefully, and that's why I think more CVCs tend to invest into these spaces still. And I agree with you, compared to software, even healthcare for sure, it's more and more CVCs tend to invest in the hardware-related spaces than it is in other places such as software or healthcare. Reason being, it's the value chain. That's my give and take here. That needs to be the risk, and which is for sure the risk in getting the companies to a successful exit.
Sounds logical to me. I'm looking at Guido here. I mean, you probably can't tell, but you've been listening and nodding. Is that your experience as well?
Well, and like being on the like bottom of the value chain, right? And I'm challenging a little bit here the CVCs, right? Because you obviously, the startup goes, right, does all of the like heavy lifting, and then basically when they have their first like prototype, right, and it looks like, this could get something, right, that really looks promising. This is when we see a lot of consolidation, right? And a lot of names that you just mentioned are exactly that way, right? Mobileye, Habana, I mean, they all went through their first cycles. They have now a really good proof, right, that their idea actually works out. And this is, I think, where you get a little bit more certainty that the idea works, right? And that's typically they have done their first prototype product, right? They show you a board and they show you what's all nice and bigling. And there's still a lot of way to go, right? But it's a lot of good ideas that basically get consolidated, and I see that across everywhere, right? It's you said AI and edge computing. We see this, as I said, in silicon photonics as well, right? Where a couple of big players are now starting to see who else is playing in that field and what are the innovations of the last couple of months, right? And basically harvesting a little bit there. So yes, it's a very consistent model actually that you see, I would say, at the bottom of the value chain.
Sebastian, you mentioned earlier, if I recall correctly, the different markets like Asia, Europe, the United States. We also got a question in, and I've been wondering that myself when you started talking about it. Like, how do European semiconductor startups compare to North American or Asian ones?
I mean, I see it for sure in Asia. Just recently, the speed of and the quickness of iteration is so much faster than it is in Europe and in the US. I mean, you see some companies that are, let's call it, competitors to Cynthian and Mythic, which are very much in the on-edge applications for ultra-low powered AI, I would call it, and the speed of tape outs, so and new chip designs is just way exceeding or what's happening in the US and in Europe for sure. In Europe, I have to admit, we haven't done too many investments, but I think what I can say maybe now from the last year or two, from a VC point of view, what we found interesting and a bit sadly to see is that this kind of one worldwide supply chain that has been put in place seems to be kind of, due to the geopolitical situation, seems to be directed, and that's something where we see increasing VC activity happening now also in the hardware space and chip design space, both in the US as well as in China. So from a VC point of view, looking at these critical technologies that are out there, we see huge influx in money happening, which has seen a sudden spike, particularly happening over the last 12 to 18 months. But I think generalizing, for me, surprisingly to see was for sure, not surprisingly, was to see that the speed of innovation, the speed of tape outs, the speed of iteration is faster in Asia, specifically in China, than it is in the US and Europe, at least as of now.
Other opinions?
I can confirm. I can tell you, we have seen tape outs, companies that have been weeks old, right? It's not that this typically, I mean, I think Costas is right? If you look at the full development cycle of chips and of like systems, it takes typically years, right? But there is a lot of, I would say, acceleration in China where it's not necessarily, you do not have to have the full system, right? You just get started and you basically crawl along the way. And as I said, I mean, measuring in weeks is kind of an interesting phenomenon, right? Where of traditionally hundreds of people designing for quarters and years moves into, I would say in some cases, a software application synthesizing the chip design in a couple of weeks, right? I mean, there's a lot of stuff coming. Not all of that survives, right? But I mean, by the speed and by the amount, a lot of good things will still be generated along the way.
Just to add to this topic, I think, in Europe, speed is not our forte overall. It has never been, but we do have, a great DNA and very good, universities with, very impressive talent. Look at Netherlands, Switzerland, UK. There is a lot of, talent and many universities with a very strong tradition in the semiconductor industry. But we don't have that mindset that we see in China with a very quick iterations. And I would say we would still lag behind when it comes to capital. So we don't have, the bold investors like, what exists in the US, where, there's going to be a substantial funding of 10, 20 million to a semiconductor startup in a seed or Series A round. That's not very common to see here in Europe. And also, we're lagging behind in if we compare with China to, state aid funding. So I think that's holding us back a bit. First of all, the overall mindset and culture that we are not, fast enough, and the lack of capital. But I would stay to the positive that there are some really good hubs, universities where they are innovating, in very interesting areas.
So basically, in Europe, we're slow. We don't have the money, and there seems to be a slight lack of political will, if I may summarize it this way. Because we got a follow-up question, of course, which is asking where is the semiconductor industry headed? So if you take universities, specifically in Germany, traditionally there's a lot of funding available for academia, also in this area. But if you look at the semiconductor manufacturing in Europe overall, where do you think it's headed? In the next 10 years? I mean, will there be more of it?
Well, I think there is finally a recognition, right? I mean, specifically when it comes to manufacturing, right, that our supply chains are like 100% based on Asia, right? And given what happened over the last, I would say, 6 to 9 months, from a pandemic perspective, but also from a geopolitical perspective, right? I think there's a lot more understanding now that we need to look at how can we keep certain things in Europe, how can we actually folder a little bit the manufacturing assets as well, and make sure that, and this is a topic that as a foundry you are actually exposed to, that you're not vulnerable to chip fraud, right? That chips are basically being manufactured somewhere in Asia, and you do not necessarily get back what you actually sent to them. So there's a lot of security concerns or secure supply chain concerns that are coming up. So I really hope not just by the like VCs and CVCs, but also by the governments, there's a lot of push to basically keep manufacturing or pull manufacturing back into Europe.
Everyone nods. Full agreement here?
Yes.
Perfect. I find it very interesting because when you look at these processes and we look at especially the past 9 months and how the political landscape has shifted around, I would expect not just, of course, help or subsidies in pandemic times, but maybe literally the major shift. I mean, we've seen this also in media, if I may say. If you look at different suppliers, globally speaking, that people have been rethinking overall what makes sense. That said, early on, we all seemed in agreement that that the startups from other parts of the world are faster, potentially better, if I may use that word right now, just for the sake of hyperbole, which leads me to ask, if that's good or better, like how would you see that move into Europe then? Because if everything that's doing well at the moment comes from outside of Europe, what's missing? What's needed here then to actually get this off the ground?
But I wouldn't say better necessarily. I get your exaggeration here. As I said before, I think we're very good in innovation, and we have very deep roots when it comes to innovation, starting from the academia. What we're missing is how we accelerate that innovation, how we productize it. And over there, either you just let the market, define it, so you will see more private investors, supporting those companies, or then you will see some state aid funding, from Europe as well, like what China has been doing the last few years. So I don't know what the answer will be, But I hope we're going to see, both of those forces coming into play, which then will turn Europe to a very competitive player in the global industry.
It's exactly what I was trying to get to. When will we be competitive, right? Because political mindset is one thing, of course, but then coming from a more entrepreneurial background, then you need the people actually doing it, not just academia, but you need the application at some point. But Sebastian, you were about to say something.
Well, I think it's, again, very holistic and it's not so specific, but we have great ideas, right? We have from a patent point of view, from a university papers point of view, right? We're leading edge, let's call it, put that term in here, from a research level. It's a matter of being entrepreneurial enough, and this is something difficult to change in Germany. I know. I worked for HIGHTECH for 3 years. Great people out there, and I think we have great technology also from the startup when we found a startup, right? But it's a matter of acceleration. It's a matter of putting rather than $5 or $10 million into a company in the Series A or Series B, compared with maybe 50 to 100 million that in the US is put in for a technology that initially was at the same level. So I think it very much comes down to business acumen or entrepreneurialism within Europe that could improve potentially, and obviously funding. And I think if you can create this, and at Dresden, we have a great ecosystem there, right? From a microelectronics point of view, Munich stands out as well from a biotech healthcare point of view. Then you have Berlin, which is a software center, potentially almost of Europe. So I think we have the hubs there. We just have to build on it. And then Silicon Valley wasn't built over 5 or 10 years. It took a long time. Around Cambridge in the UK, it took a long time to build up this business angel network there. So I think it's a matter of persistence there to further nurture this ecosystem across various hubs in Germany and in Europe. And I think then we're getting there. But there's no bulletproof answer to this one.
It's almost like we talked about it beforehand, coming from the background of the Digital Hub Initiative, and Dresden is also one of the hubs for the semiconductor industry in that respect, the Smart Systems Hub. And in Berlin, we have the Hub for IoT of the German Ministry of Economic Affairs. The idea is to basically connect all the important companies and all the important centers in Germany. What's your take on that then? You seem to be very fond of hubs. Should they collaborate? Should they just have their own profile? Where would you see this?
Very difficult for me to comment on. I think it's this networking effect, as I mentioned before. If you have the right talent there, if you have the right partnership also from an industry level there, and if you have the funding sources there, I think if you can create within these hubs, these nexus where you can really engage and connect small and big companies. I think if you can get that to work, you will achieve this. And if you want to create this over multiple cities or hubs in the right way, I think there's no harm about it. I think that's the way it works, and that's the way it needs to work in order to really, and we're living in an interconnected world, but also in a very complex world, particularly in the semiconductor electronics business, where each company, big and small, knows about each and every detail. And in order to make this work, I think it all comes down to connectivity and transparency in these hubs. That's all I can say. I think I'm a bit removed, I would say, from the day-to-day operations in these hubs. But as a VC, I would say that's the way I would make it work. And China is very similar. They created this in Shanghai. They created this in Shenzhen. Everywhere you will find these kind of hubs where big and small companies are virtually sitting next to each other. And I think that's what made Silicon Valley work. That's why they made the Golden Triangle in Cambridge work. And I think, for me at least, from experience and from history, it looks like that's kind of the magic bullet.
Do you agree, Guido?
I actually wholeheartedly agree. Also, basically, to an extent where I think this partnerships and collaborations are able to remove a little bit the angst and anxiety around failing, right? I believe a lot of our hesitation that we have in to really start up something is it takes forever. What happens if it fails, right? And getting this outside in view into my idea from other startups or from other people that are in those hubs might actually be an acceleration for yourself to basically understand where are your weak points and where are your strong points. I will never forget the discussion that we had in Dresden here in Globalfoundries with a couple of startups out of Dresden, and we were like pitching for 15 minutes how great our technology is and how we can control variability of the dopants in the semiconductor grid. And the software company looked at us and said, we have no idea what you're talking about, right? But that's what we're now trying in the Smart Systems Hub, to connect a little bit the dots, right? Because there is some merit to dopants and atoms, but it's not what makes those startups happy, right? We need to basically fill the gap in the middle, and I think that's what the hubs can do, right? Help a little bit with knowledge about the things that are not your startups' particular strong point, but you get a lot of good feedback and input of what you should do, or more importantly, what you shouldn't do.
I mean, I would always also argue that if you look into IoT, meaning the physical and the digital connected, it's a discussion you would have to have. But Costas, maybe you see it differently, or do you also agree?
I agree with all the points that we just discussed. I mean, I have heard a lot of things, and all of them were correct. So it's about, the culture that Guido just mentioned, which is probably the most difficult thing to change overnight. So the fact that we embrace failure as part of the journey, that is what Silicon Valley has managed quite successfully over the last few years. And if we embrace this mindset, it will eventually accelerate things. You can try, 1, 2, 3 times until you become successful, and that is part of the journey. I wouldn't go very far away. I mean, if you see, the innovation that is happening in Israel as well, they have been quite successful. A very small nation that has this mindset of, being entrepreneurs and trying things. Of course, they did have some very good roots in technology and in the semiconductor space. They have made them quite successful, at a global scale. So I think it's those small things that we need to collectively work on as an ecosystem, as countries, as governments, in order to tackle. I am, by definition, by principle, I'm optimist overall. I have been an entrepreneur, as I mentioned before, so I like to see the glass full half full. So I think things change. If I compare to the ideas and the entrepreneurs I was meeting, 3 years ago, and the ones that I meet, the last few months, I do see also business talent in their teams. It's not that just they have a research idea that they're trying to do business. So there is incremental improvement in the teams, at least, the way I experienced that over the last, few years. Whether we are fast or the fastest in the world as Europe, probably not, but I think we're getting better, and there is an incremental improvement. That is my observation, my 2 cents here.
Then let's get to the discussion of startups and where you guys see them. I mean, all of us have to do with startups. All of us have to deal with startups, and we've all been working with them. My first question to you guys would be: startups for you and your company, more strategic fit or more tactical fit, and why? Who wants to start?
I can start. For us, it's both, right? Because when we look at startups, it's really at 3 levels, right? There is the technology level, right? We still have, as Costas said, in Europe, a lot of good universities that talk about material science, and there are many startups still coming up there that provide a lot of good stuff for us on the technology level. Typically, to get those technologies in production takes many, many years, right? So those are more like strategic elements that we can do. If you step up the value chain, then there are basically semiconductor design companies, right? People who develop chips and a little bit of firmware, where we are looking at specific IP blocks, right? Certain circuits that they develop in a new methodology or in a new with the new results that are certainly interesting for us to basically include in what we call the IP portfolio, right? That they can basically make money with the circuits that they have developed for other companies as well. And last but not least is, I would say, system level companies that tell us a little bit of what does the hardware of the next 5 years need to do, right? Where do you need to go from a power perspective? And there are many, many good inputs, even if it sounds like the distance is very far between a systems company and a hardware company. There are a lot of good ideas that originate there that the hardware guys need to somehow implement, right? And so that's, again, a strategic kind of thing where you would say what is needed from an IoT or an edge computer like 2-3 years from now where the hardware guys need. But those are all ideas that where we have cases actually where we work with startups together that got us some information, and we basically could help them with access to the technology as well.
Sebastian?
I mean, I have two hats then on, it seems. I mean, from an M Ventures or from a CVC's perspective, I mean, we are in a way a pure play financial investor. So I mean, probably it makes sense, right? I mean, you wouldn't invest with a company where you wouldn't get a return out of it. That normally wouldn't work for Merck then either if they were to acquire it. So having this financial head on is the important bit for us. But for sure, I mean, we think a bit beyond on how can Merck help this and support this company. What is beyond that the value add of Merck? So this is not something that we will put as a requirement to investing in, but for sure, hopefully the company has thought about if there are certain ways and means where Merck as the mother company can help and support this company. For us, it's twofold in a way when you think about it. From a display point of view, I mean, we're the main provider of liquid crystals still for displays. I mean, you can think about market enablement, which companies are out there where liquid crystal could, for example, be used, a simple case, right, beyond displays. I mean, you could use it for smart antennas. There's a company in Darmstadt who are making very thin smart antennas that you could put on your car. Talked about Wi-Fi and 5G before. You can put them in your windows, for example, standard building windows for smart glazing, for example. We've invested into a company that is using liquid crystals, standard liquid crystals, to make holograms. So there's ways and means where this market enablement or where we could use existing materials of Merck to kind of enter new markets and potentially even use these materials to kind of specialize them a bit to make them really for each and every market fit perfect. And the other bit is for sure, I mean, next generation of existing solutions out there. I mean, liquid crystals I mentioned, next types that you find in your smartphones or tablets is OLED. What comes next? People talk about micro LED. We've done an investment in a micro LED company. So I think this is something, hedging our bets against what the next incumbent technologies are, and hedging our bets in what our existing materials could be used for in addition of the current markets that we're addressing. So that's maybe the way I would summarize it. But from a Merck or from an M Ventures point of view, I have to say it's financially driven, making the right bets and hoping that this company is going to be bought out at attractive returns for M Ventures. And one of the possibility for sure would be Merck to buy it.
And you, Costas?
So for us, definitely more, the motivation is strategic. Apparently, we do have a financial discipline when we're considering an equity investment in a startup, but primarily it's strategic, and it's strategic in both directions. We want to see, first of all, how we can support the startup, somehow, hack their growth, how we can enable them in order to accelerate things, in order to find a market. And at the same time, we want to see how their technology, which will be adjacent to what we're developing, will also increase, the value proposition of what we're doing as a company. It's not tactical on our side, so we wouldn't invest in a company where they are developing a technology where we are also considering to develop internally. So we wouldn't see an investment as a first step towards an acquisition. It's more like adjacent technologies next to us, where 1 + 1 will be equal to 3 or more. So definitely strategic, I would say, but with a financial discipline. That is our.
And if it's strategic, then how does the relationship work? I mean, what kind of startup expect from you, like on a mid to long term basis? Do you have meetings? Do you teach them, or is it just something where you give them the broad picture and that's it?
So we want to assist them, coach them without being a pain to them. So we do not enforce that we will coach them, but we want them to recognize that we can add value to their business. We want to keep an arm's length. Sometimes that is a very tricky point when companies accept funding from a corporate. They don't want to limit their opportunities in the future either, whether those are commercial or raising funding from another investor. So it's a balancing act between how much support you give to the startup without limiting their future growth opportunities, and that is on a case-by-case level. I would say that that's something we assess and we discuss with a potential investee before we place an investment.
How does it work at M Ventures?
It's manifold. First of all, it's general. I think market intelligence that you can provide. It's supply value chain extension that you can provide to the companies, not only from a Merck perspective, but I mean we have will and interact with most of the hopefully the customers and end users that the portfolio company will work with as well. So I think facilitating contacts to the right people within the value chain is I think very important for our portfolio companies. And I think last but not least, it's really since it's admittedly CVC dominated, it's very much also facilitating relationship to the right investor in future rounds. So I think it's everything from for the company from an operational level that they will manage and where we can provide advice and help, and also from a fundraising point of view. I think this is something where we for sure see ourselves in enabling the company to don't have to worry too much about making these contacts on themselves, which is very difficult to do typically for startups.
Guido, how does it work at Globalfoundries? How do you interact with startups?
I mean, I would say a little bit differently than Costas and Sebastian, because for us, there's certainly, I mean, one of the things that started, and Costas mentioned it earlier, right, is get easier access to the technology itself, right? Being able to do a tape out and being able to get a handful of wafers is certainly one of the services. We also had cases where we basically started to work with those startups and basically got them a little bit more technology, I would say, kick, right? Because there are many, many things that you can do under the hood. And once we basically see there is a certain benefit or the market direction is the right thing, we can help a little bit with providing some technical guidance, again, deep in the transistor level, right? Where you can get even more out of this idea and maybe provide a couple of blocks to them that could help boost their idea even further, right? That's really for the lowest, where I said it's really chip design companies. That's where we see like the biggest, I would say, a bi-directional infusion of ideas.
Thanks. We're getting close to the end of our time, but before we have to split ways, I was wondering, is there any advice that you would want to highlight and let's give each one of us 30 seconds. So is there any advice you would want to give to founders, to startups, to people who might want to interact with you? And if so, what is it? Who wants to start?
I can just say, I think the conclusion before, just be faster and embrace failure as part of the journey. That would be my 2 cents here.
All right. Guido?
I would say use the networks that exist, right? Even things like HIGHTECH VENTURE DAYS where people can meet each other, right? I think there is a lot of value in networking and getting help from others as well, right? And getting upgrades and inputs from others.
Thank you very much. Sebastian?
Nothing to add there. It's openness, transparency, and connectiveness. I think this is everything that we discussed. I think this is the most important bit, particularly in semiconductor electronics. And don't be afraid to talk if they seem to be big, but I think they're not. I think everyone has their open issues and things they need to solve, and big corporates such as us don't have the answers to everything, and they want to collaborate with startups, and I think this is something that you see and this pattern across the whole semiconductor electronics value chain. Connecting with startups is an integral part of it, so use this and get connected.
Well said. Thank you very much, Sebastian. Thanks, Guido. Thanks, Costas. I think this is all of our time. Thanks to everyone who listened. And if you feel free to hear more or get to know any one of us, I think you should reach out.
Thank you.